Peace be upon you, and a very warm welcome to our guide today. I'm your host. In this video, we're going to gently and clearly explore a fascinating and increasingly relevant topic: investing money in Islam. For many, the world of finance can seem complex, and when you add Islamic principles, it might feel even more so. But it doesn't have to be. We'll demystify what makes an investment halal, or permissible, and how Muslims can grow their wealth ethically, in alignment with their faith. If you're new to Islamic finance, curious about ethical investing, or just want a clearer understanding, you've come to the right place. We'll break it down step by step, in a calm and easy-to-follow manner. If you find this guide insightful and helpful, please do consider giving it a like, subscribing for more educational content about Islamic finance and principles, and sharing it with others who might benefit. Your support truly helps us to spread understanding and empower ethical choices. Over the next 40 to 45 minutes, we'll embark on a comprehensive journey into investing money in Islam. Here's a detailed overview of what we'll cover. First, excessive uncertainty, gharar, and the emphasis on real economic activity. Next, we'll delve into what precisely makes an investment halal or haram, exploring both the nature of the business and its financial structure, as well as the role of Sharia screening. Following that, we'll explore common halal investment avenues, such as Islamic equities, sukuk, Islamic bonds, ethical real estate, and other emerging opportunities. Then, we'll touch upon the importance of purification, zakat on investments, and how it integrates with wealth growth, ensuring continuous blessings. We'll discuss the profound spiritual benefits and broader ethical considerations of investing according to Islamic principles, highlighting its positive impact on individuals and society. We'll address some common misconceptions and important etiquettes in Islamic investing, clarifying key points for clarity and confidence. And finally, we'll offer some practical tips and resources for getting started with halal investing today, guiding you on your ethical financial journey. So let's begin our journey into understanding ethical wealth growth, shall we? Investing in Islam, it's about growth with integrity and purpose. Riba, or interest, is forbidden, ensuring fairness in financial dealings. Halal investments are rooted in ethical businesses and real economic activity. Sukuk, they're like Islamic bonds based on real assets and shared risk. Purifying your wealth through zakat is a fundamental duty and a blessing. Ethical investing aligns your finances with your values, creating a positive impact. Every investment is a reflection of your principles and your commitment to justice. 1. Fundamental principles of Islamic finance. Let's start by laying the groundwork, the fundamental principles that guide all financial dealings in Islam, including investments. These principles are deeply rooted in the Quran and the Sunnah, the teachings and practices of Prophet Muhammad, peace be upon him. They emphasize justice, fairness, transparency, and ethical conduct in all transactions, viewing wealth as a trust from God, meant to be circulated for the benefit of society. The cornerstone is the absolute prohibition of riba, or interest. In Islam, money itself is considered a medium of exchange, a tool for trade, not a commodity to be traded for profit. Earning fixed, predetermined interest on a loan, where money generates more money without any real productive effort, tangible asset backing, or shared risk, is forbidden. This applies equally to both giving and taking interest. This prohibition aims to prevent exploitation, promote equitable distribution of wealth, and encourage genuine economic activity. Instead, Islamic finance promotes profit and loss sharing contracts like mudaraba, a partnership where one party provides capital and the other provides expertise, sharing profits, and musharaka, a joint venture where all parties contribute capital and/or expertise and share both profits and losses. These contracts are fundamental, ensuring that risk is shared and returns are linked to real economic outcomes, fostering genuine collaboration and discouraging purely speculative gains. Another critical principle is the avoidance of gharar, or excessive uncertainty and ambiguity. This means that all transactions must be clear, transparent, and free from any significant hidden risks or elements of speculation. Contracts should be well defined, and the subject matter of the transaction should be clearly known and existing. Complex derivatives, short selling, where one doesn't own the underlying asset, or ventures where the outcome is highly uncertain and dependent on pure chance, are generally prohibited. The aim is to protect all parties involved, prevent disputes, and ensure fairness and certainty in dealings. Closely intertwined with gharar is the prohibition of maisir, or gambling. Any transaction that involves pure chance, where one person wins at the expense of another without real effort, value creation, or tangible exchange, is strictly forbidden. This principle ensures that wealth is generated through legitimate, productive means and discourages reliance on luck or speculative gains. Beyond these explicit prohibitions, Islamic finance also places a strong emphasis on ethical and social responsibility. Investments should not contribute to harm, immorality, or activities that are detrimental to human well-being or the environment. This means rigorously avoiding industries primarily involved in the production or distribution of alcohol, pork products, conventional armaments, adult entertainment, gambling, tobacco, or companies with excessive reliance on conventional interest-based financing. The overarching goal is to ensure that wealth is not only acquired through permissible means, but also utilized in ways that benefit society and uphold moral values. 2. What makes an investment halal or haram? Building on these foundational principles, let's understand what specifically makes an investment halal or permissible and what makes it haram or impermissible. When evaluating an investment, especially in the stock market, two main layers of screening are applied: the nature of the business and its financial structure. First, and most obviously, the primary business activities of the company or entity you're investing in must be entirely halal. This means their core operations cannot be in any of the prohibited sectors we just discussed. For example, investing in a company whose main revenue comes from selling alcoholic beverages, operating a casino, or providing conventional interest-based loans would be haram. It's crucial to look beyond just the company name and understand its genuine source of income. This is known as sector-specific screening. Second, the financial structure of the company itself is rigorously screened, even if its business activities are halal. Why? Because a permissible business might still engage in significant impermissible financial practices, such as excessive borrowing through interest-based loans or holding large amounts of interest-bearing cash. Islamic scholars and dedicated Sharia screening bodies apply specific financial ratios to ensure the company's reliance on interest-bearing debt, interest income, or non-compliant liquid assets is minimal, adhering to specific thresholds. For instance, common screens might include: interest-bearing debt should not exceed 33% of the company's market capitalization or total assets. Interest-bearing income should not exceed 5% of the company's total revenue. Liquidity, cash and short-term investments, should not exceed 33% of the company's total assets to discourage hoarding money rather than engaging in productive investments. This rigorous financial screening is why simply investing in a well-known technology or retail company isn't enough to ensure halal compliance. Due to these complexities, Muslims are strongly encouraged to do their due diligence or, more practically, rely on dedicated Islamic finance services, apps, or funds that employ qualified Sharia boards to conduct this continuous screening on their behalf. These boards consist of Islamic scholars specialized in finance who ensure the investments adhere to Islamic law, providing peace of mind and simplifying the process for individual investors. 3. Common halal investment avenues. With these principles and screening criteria in mind, let's explore some of the most common and accessible avenues for halal investing available today. The landscape of Islamic finance has matured significantly, offering various options for ethical wealth growth, from public markets to direct asset ownership. One of the most popular and accessible ways is through Islamic equities, or stocks. These are shares in publicly traded companies that have been rigorously screened, both in terms of their primary business activities and their financial ratios, to ensure they comply with Sharia principles. To simplify this, investors often utilize Islamic mutual funds or Sharia-compliant ETFs, exchange-traded funds. These funds are managed by professionals who continuously monitor and select a diversified portfolio of such halal stocks, making ethical investing convenient for individuals without requiring them to screen each company themselves. This diversification also helps mitigate risk. Next, we have sukuk, often referred to as Islamic bonds, though they are fundamentally different from conventional interest-bearing bonds. Sukuk are essentially certificates that represent fractional ownership in a tangible asset, a lease, a project, or a specific venture. Unlike a conventional bond where you lend money and get interest, with sukuk, you are buying a share in something real. Investors share in the profits generated by that underlying asset or project, and they also share in the risks, aligning perfectly with the principle of profit and loss sharing and avoiding riba. Governments and corporations globally utilize sukuk to raise capital for large-scale infrastructure projects, energy initiatives, and more, demonstrating their growing acceptance and utility. Investing in real estate is another widely accepted and often preferred halal avenue, as it inherently involves tangible assets and generates rental income or capital appreciation from real economic activity. This can involve direct property ownership, participating in ethical real estate investment trusts, REITs that comply with Sharia principles, or engaging in property development projects through compliant financing structures. For individuals looking to purchase a home, Sharia-compliant mortgage products are available, structured typically as ijara, leasing with an option to buy, or murabaha, cost-plus financing, where the bank buys the property and then sells it to you at a profit, or leases it to you, avoiding interest on the loan. Beyond these mainstream options, other emerging avenues include ethical venture capital and private equity for direct investments in promising startups or businesses that adhere to Islamic principles. There's also growing interest in Islamic microfinance, which provides small loans or investments to low-income individuals or entrepreneurs, fostering economic empowerment and social development in a halal manner. 4. Importance of purification. Zakat on investments. As you grow your wealth through halal investments, it's crucial to remember that your financial journey in Islam is holistic. The obligation of zakat, the annual obligatory charity, extends to certain forms of investments, making wealth purification an integral part of an Islamic investment strategy and a continuous source of blessings. The specifics of zakat on investments can vary slightly based on scholarly interpretations, but generally, for a stock portfolio, zakat is typically due on the portion of your investment that is considered zakatable assets. This usually includes your liquid cash holdings within the portfolio and a percentage of the market value of your shares in Sharia-compliant companies, specifically the portion representing net zakatable assets once they reach the nisab threshold and a full lunar year, Hall, has passed. For instance, if you hold shares for trading, zakat might be calculated on the full market value. If held for long-term growth, it might be on a portion of the value or income. For rental properties, zakat is generally due on net rental income received after expenses, not the market value of the property itself. It's also important to note that even the most meticulously screened Sharia-compliant funds might inadvertently generate a tiny fraction of impermissible income. This can happen, for example, if a company has a conventional bank account that accrues a minuscule amount of interest, or through certain minor financial transactions. Reputable Islamic funds and screening providers will typically calculate this impure income and advise investors of the exact amount. Investors are then encouraged to donate this specific portion to general charity, without expecting a reward for it. This act of purification ensures that the overall investment and the wealth derived from it remain entirely halal and ethically clean, highlighting the meticulousness and commitment of Islamic finance in ensuring financial purity. Fulfilling your zakat obligation on your investments is not merely a tax, it's an act of worship, a purification, and a key to receiving further blessings. It is widely believed that wealth purified by zakat carries greater barakah, or divine blessings, fostering sustained prosperity and satisfaction, and it opens doors to unimaginable rewards in the hereafter. 5. Spiritual benefits and ethical considerations. Beyond the purely financial returns, investing money in Islam offers profound spiritual benefits and deeply rooted ethical considerations. It's about much more than just numbers on a balance sheet. It's about aligning your financial decisions with your deepest values, contributing positively to society, and fulfilling your role as a responsible steward of Allah's provisions. When you consciously choose to invest ethically, you're not just growing your wealth, you're actively participating in an economic system that promotes justice, fairness, and social responsibility. This deep alignment between your financial actions and your spiritual beliefs brings an immense sense of inner peace, conviction, and integrity. It nurtures virtues like patience, discipline, and gratitude as you understand that your sustenance and prosperity come from Allah. It truly makes you a conscious investor, thinking beyond immediate profit to the broader impact. Ethical Islamic investing also has a very tangible and far-reaching societal impact. By channeling capital into businesses that operate ethically, avoid harmful practices, and engage in real productive economic activity, you contribute directly to a more stable, sustainable, and equitable global economy. You actively support industries that align with human well-being, environmental preservation, and moral values. This is a powerful way for individuals to use their financial power to shape a better world, fostering sustainable development and social justice, rather than contributing to exploitation or environmental degradation. Ultimately, investing in Islam is about realizing that your wealth is a tool, a means to an end, and that end should be to seek Allah's pleasure, benefit humanity, and leave a positive legacy. It transforms mere financial transactions into acts of worship. 6. Overcoming common misconceptions and important etiquettes. Before we conclude our comprehensive guide, let's address a few common misconceptions that people often have about Islamic investing and reiterate some crucial etiquettes, ensuring our ethical financial journey is clear and confident. One frequent concern is the perception that halal investments offer lower returns compared to conventional ones because they exclude certain sectors. This is a common myth. Numerous studies in the performance of Sharia-compliant indices have shown that ethical Islamic investments often perform comparably, and sometimes even outperform, conventional markets over the long term. Their focus on real economic activity, lower debt reliance, and avoidance of speculative industries can actually lead to greater stability and resilience during economic downturns. Ethical investing is not about sacrificing returns, but about aligning values without compromising growth. Another misconception might be that it's too difficult or complex to find halal investment options. While it requires a bit more awareness than just picking any stock, the growth of Islamic finance has led to a proliferation of user-friendly resources. Many reputable Islamic financial institutions, specialized halal investment platforms, and Sharia-compliant brokers now exist, making it increasingly accessible for the average investor to identify and invest in halal avenues. Technology has played a significant role in simplifying the screening process for individuals. Finally, remember the etiquette that underpins all Islamic financial dealings: transparency, fairness, and honesty. When engaging in any investment, ensure all terms are clear, there are no hidden fees, and you understand the risks involved. It's also important to manage your wealth with gratitude, knowing that prosperity is a blessing from Allah, and to avoid arrogance or excessive greed. These ethical foundations elevate investing beyond mere profit-seeking to an act of responsible stewardship. As we bring our comprehensive exploration of investing money in Islam to a close, I truly hope this in-depth guide has provided you with a richer and more nuanced understanding of this incredibly significant and beneficial practice. It is a dynamic and growing field that empowers Muslims to grow their wealth while upholding their ethical and spiritual values. It enables you to be a responsible and conscious steward of your resources, creating a positive and lasting impact with your financial decisions in this life and the next. We deeply appreciate your engagement and your commitment to learning. Now, we would truly love to hear your thoughts. If anything we've discussed today has resonated with you, if you have any questions or reflections on halal investing, or perhaps even personal experiences to share, please do share them in the comment section below. Your contributions create a valuable space for learning and understanding for everyone. If you found this guide comprehensive and beneficial, please take a moment to give it a thumbs up to show your appreciation. Remember to subscribe to our channel for more detailed explorations of Islamic finance and principles. And if you know others who might be curious about ethical investing or could benefit from this explanation, please do share this video with them. Your support in spreading knowledge is truly appreciated and indeed a valuable investment in itself. Thank you once again for joining me on this journey to understand ethical wealth growth. May Allah bless your efforts, your resources, and your intentions. Until our next guide, peace be upon you.